Hello and welcome to this week's Inner Circle Masterminds update. I'm going to start off with currencies through the week. Talked about the euro against the dollar and how 118.61 was extremely important. It was the original breakdown point. It was a daily and a half-day level. We sort of popped above it a couple of times, but it effectively stalled, which allowed some movements on the euro cross rates, and got some signals on Thursday, so a time continuation, and then also a stepping process ending. Accelerated lower yesterday, so a nice trade there. It was on a few cross rates, so we also had the Euro Aussie, which some got involved in, and that actually managed to close just below 3 down. It was a slightly more powerful signal because it had a bear cage as well as the time continuation and steps. And we'd had that volatility on the pound, which held 131.22 to the tick on Thursday, and we had a UFO having hit 3 up at one point, and a big reversal and a slightly smaller move. Also allowed some movement on Aussie cross rates, and some of us got involved in Aussie Canada, and the reason why they did that as opposed to the euro was because it was at daily support. So ideally we want to see signals at least a daily, or preferably weekly or monthly levels. One of the other reasons for doing it was because dollar CAD has been flirting with 124.60 for some time now, and it continues to do so. It did hit 1 up during the day, but actually closed a fraction above there. But it was the Aussie dollar which gave us a buy signal on Wednesday, I think, no, Tuesday, and that got back above its monthly level. So this enabled the Aussie Canada cross to move in a positive manner. So the Aussie had space to rally, Canada was a little bit more trapped. So if we look at the dollar rates, this is the euro dollar. You can see there that it was just a couple of times popped above that, which is 118.61, but hasn't managed to close above it. If we do the dollar index, the dollar index has continued to drift, stopped shy of the daily support at 92.49.5, so stopped 10 ticks above that. And then if we do the pound gets buffeted backwards and forwards with the eternal boredom of Brexit, but we hit 131.22, which was an intraday level to the tick, and reversed and then sort of bounced higher. But the pound is subject to extraneous stories, and so not something that we're interested in that much, because it's not really trading safely. It's a politician or somebody says something and it can move very quickly, and it's not for real really. Gold, dollar down, gold up. Talked last week about this extremely rare signal here. This is a stochastic based one, a little blue square. Can go years between seeing them. Stopped just ahead of that weekly support and rallied very strongly. Was strong again on Friday and stopped just shy of this 1307.2 point. That is the reference for next week. Start making daily close above there, and we can go all the way up to 1357 again. Earlier on the week, crude was in focus. We had a time continuation buy, but into weekly resistance, so needed to close above there. We did trade above this weekly level here, which meant that the line has now moved up, which was going to open up space. I think I talked about that on Wednesday. And then yesterday, we've closed above at 51.22 points, so opened up some space to get back above 52.86. We hold there, I think I'd have to say, on a weekly basis, because we've had a few false dawns on dailies through this year. Then that opens up 59.12. While on the subject of commodities, grains, having had a pretty boring late summer, finally come to life on the US Day report on Thursday. Could have really construed the report either way, but the market initially went down, held an intraday level pretty much perfectly, and then accelerated up. So that's power play buy, taken out the daily resistance. So it has room to get up to 1038 and maybe 1047. The actual fundamental story wasn't, I probably know too much about grains. To me it wasn't particularly bullish, but there's no denying the price action. Corn's reaction was far more muted, although massive buy signal. Just about every version or permutation of an RSI pattern appeared on that report, and we did edge higher on Friday. Wheat was interesting, had a negative reaction to the report, but then reversed that on Friday. We've closed above 3 up, so an expansion of range there. There are some issues weather related in Asia and Australia, so this one from a fundamental point of view feels as though it has the potential to move the most. First target 475. Just looking at the products, soya meal had this buy at that final daily support a while ago, and we've mucked around this monthly and weekly level and then took it out decisively. 34.10 the first target, that at 31.63 is the key support. Finally, bean oil, again time continuation at daily support, a step process ending on a 420 minute, a muted response on Thursday, but an acceleration up yesterday, a target of 34.66. I'd say probably the most boring area of the market is equities and indexes. Not a huge amount of range on a daily basis. We're getting continued very, very minor negatives, but there's absolutely no reason to contemplate getting short. We're coming into the bulk of earnings season in the next couple of weeks. Stocks typically get ramped ahead of it by pundits and TV, etc. An example, Google's price target by Credit Suisse was up to $1,350 from its current 1,000. So there's little reason to see anything that's going to derail equities at the moment, unless we get some huge geopolitical event. So this is the S&P. Everything's still below, even daily levels are still below, and they're going to continue to stay below unless we can form some sort of 5-bar pattern where the middle bar of 5 is the highest point. And it's going to have probably some sort of expansion of range, which is not happening either. Moving into Europe, the DAX, we've now had 4 dojis in a row. So we have a TriStar doji, and now I don't know what they call it. The range is very, very narrow. Volatility has completely disappeared out of this. We are above that monthly level though, and we haven't taken out any intraday levels either. There is a lack of impetus. But again, no reason to stand in front of the truck at the moment. Moving across to the FTSE, again the last few days very, very quiet, but sitting at all-time highs, no acceleration, no reason to get short. The Australian stock market has got one of the most bizarre patterns I've seen in a very, very long time. I mean, this is just crazy without going anywhere. We had a bullwhip near the support point, which was extremely condensed market, and we have broken up. So this is a huge, what I call inside bar pattern, and it's 4 or 5 months long. So if this is for real, we really should accelerate and move up a considerable distance. So a positive outlook for the Australian stock market. We don't want a weekly close back below 57.81 because that'll put it back in the sideways again. So this market needs to take off and accelerate higher, and it's one that we're starting to get more interested in. Finally, bond markets, payroll day. We'd been holding 152.01 consistently. Payroll spiked down, reversed. Told you that the market didn't want to go down. It's pretty quiet, but then we've accelerated higher on Friday, closed above 3 up. This is a counter trend rally up to 154.28 at least. This is the Bund in Europe again. Very, very rare signal, that little blue square. Took a couple of days to develop, but we've accelerated up. 162.31, not that far away, is the main focus. Finally, as earnings season, a new service that's going for our customers and clients is to do with major levels after results. So Hawk was something that came out on after hours on Wednesday. We're interested in the weekly level above. Once the market had come out with its results and it said that it missed, as it turned out, the market didn't like it, accelerated lower. An example of how this can work is ODC. So their results came out, been going up very, very high. It's always a short-term day trade. or maybe just hold for one more day. So the limit order is put in at the monthly level because it's so far away from the price as it was, and liquidate on the close. If it closes below the monthly or the weekly, if it was, then that is to say that the trade is over. So short-term ways of taking advantage of earnings season. Another example of one where we did have a limit order but price never got there is Cost. So their results came up. We were interested at 150.10. The results missed, but it never got down there. Okay, that's it for this week.